I think there's a fair amount that's gone wrong here. First of all, you have somebody who's pled guilty to insider trading and is somehow still operating. Now it's a family office, but the question is, why were people on Wall Street so willing to deal with somebody with this kind of record? For a long time, they weren't. But then suddenly, when they realized how much money there was available, they started doing business with him. So that's one problem. The second problem is that his use of swaps enabled him to both mask his identity and also mask the fact that he was actually getting payments or funding from multiple banks for the same transactions. That enabled him to incredibly over-leverage, and there was no disclosure of this, and the banks were not aware that they were actually participating in a plan in which other banks were funding the exact same trades. Those are serious flaws, I think, in the way the regulations have operated, and there will be a need to revisit this and determine whether there's something better to be done when you have somebody in this kind of situation.
And then on the flip side, Harvey, are there some positives to take that clearly we've seen some massive moves, 2-3 day moves in certain stocks, but we haven't seen it infect the broader market, so far at least?
Yeah, I think what you're seeing here is somebody who was, as it turns out, making very poorly timed bets, but his transactions were actually propping up the market for the securities in which he was investing. And one individual, and certainly one individual in a family office, should not have that kind of ability to affect the markets for these securities.
So, Harvey, I mean, we're just talking about this with Robert Frank. I mean, can the argument be made, and I realize this could be a one-off situation, but can the argument be made that there is essentially the shadow hedge fund system operating out there? Family offices, I realize, not necessarily hedge funds, but that not only needs closer scrutiny, but potentially could create or could lead to other situations, risky situations that are out there in the market, given the conversations we're having about low interest rates and all the liquidity, et cetera.
I understand the argument, but I always think there's a risk of trying to conclude too much from what is a very specific fact pattern. At the moment, we have somebody who should not have even been classified as a family office, in my opinion, because he started out in a very different situation from those that the family office rules were intended to protect. And as a result, it seems to me, the first step is to deal with the kinds of circumstances we're facing here, as opposed to sort of throwing out the entire system of family office exemptions.
Shepard Smith here. Thanks for watching CNBC on YouTube.